morning on this chilly Wednesday. Is it Wednesday? Yeah,
It
it's
is
Wednesday.
Wednesday.
Good Lord. How is
Well,
everybody?
it'll be Christmas before you know it. We got, half this week and 2 weeks, and then it's Christmas week.
Stop.
Now I'm going to go where Big Bad Bill is because that looks like a nice place because I got snow behind me, and Big Bad Bill's got
Yeah,
oceans, and
that's
palm
right.
trees. Yeah,
You really have to go south for that.
I would have to go really south.
I would not suggest Venezuela or Colombia, but Key West
No,
I
but
maybe.
hear
I don't think I'll go
I hear you
that
can't fly.
far.
I
I
don't
just need to
think you
go
can
far
fly
enough
into
where
Venezuela.
this white stuff isn't on the ground, and it's
Yeah. And jet boats are kind of out of style for I hear.
I hear that too.
Yeah. Yeah.
Okay. Well, we had good conversations yesterday, and markets again. Let's get a screen up here and see what we're doing. Markets yesterday were up. Okay, it was interesting because they were up. The Dow was up about 0.4%. The Nasdaq was up about 0.6%, and the S&P was up about a quarter of a percent. But the interesting thing about it, even though the markets were up, the breadth was negative. The advancers were only 40%. The decliners were 55%. Uh, and then you look at the stocks that were trading above their 50-day, it was 43% only. So we're still in the negative side of that. And then those that are trading greater than the 200 dropped below 50, just barely, but at 49.8%. So the markets went up, but when you look at the market breadth of the market, in what's inside the markets under the hood, they were actually kind of negative. So um, some news. Uh, OpenAI. It was kind of interesting. I don't know. I put it in my Discord under my office. A story about Sam Altman called a code red meeting with all his employees about how far behind they've fallen in Chat GTP compared to Gemini, I guess, and they're adjusting resources and everything. And I saw a couple of videos of people trying to explain this, and it's really showed how Google has really kind of jumped ahead of OpenAI on this whole AI development part, and it showed kind of the Google world and who is supporting Google with the TPUs, and then you got the OpenAI world with NVIDIA and that group, and so the main focus was look, competition starting to pick up, between the companies instead of all of them like kind of working together. Now you're seeing competition, so it'll be interesting in AI, which side works, but Google is actually an operating company and it makes money. OpenAI needs support from other companies. It does not make money. So it'll be interesting to see how that all works out. And I'll leave it to Kerry and those who follow AI more than I do to kind of knock that out. And maybe Trent will have a thought on that later too. Unless you want to jump in now, Trent, on that.
I'm sorry, I spaced out there. What
I
did
was
you
talking
say?
So
about I was talking about OpenAI and the code red
Oh,
that Sam
well,
Altman.
yeah, I think here's some I just put an interview up on the chat there with between Michael Burry and Michael Lewis, who is the writer of The Big Short.
In the flash crash.
Yeah, and he points out, Michael Burry says the majority of people who are using AI today are getting what they want from the free version. I tend to agree with that. And he also points out that Google is heading since ChatGPT came about, and I'm using them as just an example. There are many other large language platforms. A lot of people have gone to ChatGPT versus Google search. So that puts a lot of pressure on Google search. And so when you put those two together and you say, okay, you know, uh, Big Bad, Bill, you go to your wife or your kids and say, how do you use AI? Well, I use, most likely you're going to hear the answer is I use the free version and I use it as a search tool. Not, they may not say that directly, but they're around that. And that really brings up a good question of do these platforms such as OpenAI, Grok, um, Google, are they are they selling something that the average consumer, and remember, we're a consumer-based nation, really isn't going to use? is it more is the corporate world being forced to say I'm doing something with AI when they really don't have to? And I guess that to me is that question of um, it starts bringing into question what do I use this stuff for? Now I'm using Claude AI, which is Anthropic. I'm using it to program stuff, but I would say probably out of all the people on this call, there's 57 of you. How many of you are using it to program stuff with, or how many are you programming Excel spreadsheets or Google Sheets or using Python? How are you using? Are you using it for that, or is it more of a search, answer deep, more in-depth questions than say Google search is doing? I don't know. I'd be curious to
Well,
hear, but I
I,
think
it
it's a very select
depends.
few, and this is where I think about in the sense of CapEx spending, like when is the return on that? Is it 5 years from now, or is it more like 15 or 20 years from now? And if you look at like the whole dot-com era, that wasn't a dot-com bust. That was a massive build out of fiber optic that connected to the world, which I'm grateful for. But how long did it take for that to be monetized? And I think these are questions that are now starting to surface. And if you look at stock performance of some of these companies, you're starting to see it top out. And I think Google is, Warren Buffett probably didn't buy Google, is probably his his leadership did.
Yeah, definitely.
Um, but I think I don't know. I don't know. I'm curious, but
Well,
I think this fight between OpenAI and Google and everybody else is more of we think the world is going to convert to AI for everything, and it will. I mean, a lot of things will convert, but the average American, the average global citizen, how are they going to use it? And I think that's the question you have to answer. And are they going to use it? Yes, but how are they going to use it? And is is being built out and the hype around it, justified? I
well,
don't know.
I was reading
I'm starting to question it all.
yeah, to answer your question, I've thought a lot about that too. And I was reading an article on Black Friday. A lot of people were starting to use AI to get the best prices. And I
Okay.
don't know all the platforms that they were using, but in my mind, that seemed to be a really positive thing about AI is that one thing that the consumer is going to do will be to try to find the best pricing.
I that sounds great if unless you're Amazon or Walmart.
Yeah.
Well, it,
You know what I mean? It's good for the
I,
consumer, but profitability for the seller is wow. Yeah, that's a really good
I,
point.
But I
I
bet
think
they're
it's
not paying. I
important.
bet they're not paying for that though. They're not paying for that
Yeah,
search. It's probably free. I don't pay for my. I use Gemini. I don't pay for it.
yeah,
I think
yeah.
it's important to realize that the consumers have visibility of the language model, and the consumer is saying, "Oh, I'm getting the better or similar performance from out of Gemini," and where you pay for Chat G Open AI. And I think the reason why this is such a big topic is because Oracle, Microsoft, Meta had put money. Many companies have dumped a lot of money into OpenAI, and OpenAI was the game in town to develop these AI, not just the language models, but a bunch of other business models, like, in other sectors that support Copilot and so forth. And then when you have all that money being, used to support and they have to perform, then you have Google that comes out with just a language model that outperforms it with not that big amount of money that's dumped in compared to OpenAI. That's the big worry now. OpenAI is scared because they're on the hook with all that money, and then you have Google who just outperforms language model only and nana banana, you know, that that's the big nut here. Whoa, you got Google, who doesn't have all that capital from other capexes from the other companies. Everybody's taking a second look now, and that's why he's freaking out because whoa, he's on the
Yeah,
hook, right?
he's on the hook.
Yeah,
He's
Yeah.
got to
yeah.
produce
Well,
returns.
And Google, I mean, NVIDIA's got to be looking at this because they've teamed up with OpenAI. And, Google saying, well, I don't think we really need the NVIDIA chip. We got the TPUs that we'll make and they're cheaper. And Meta says, hey, we're in on that too. So
Exactly. All of that's unfolding.
it's
Yeah.
gonna be really, it's gonna be fascinating to watch. It really is.
I
It
heard
is.
Well, you think about
Intel's making chips for Google.
What's that, Manuel?
it.
I heard Intel is starting to make chips for Google.
Really?
Yeah,
Wow.
Huh.
I
I
think
Better
heard.
all
help
these
Intel
companies
then.
play with each other.
Yeah.
They all have deals with each other because nobody knows who's going to be the winner. Like Meta's working with OpenAI, Meta's working with Google, Google's working with Nvidia. They're all playing with each other, but they're all have their own initiatives. So
Well, that's
and
what I'm
their
saying.
own,
That
yeah,
it
right.
seemed like they were all together at once. Now we're starting to see little camps break out, and it's going to be fun to see which one wins and makes it happen.
Oh, it's
Yeah,
like, when you worked at HP, you're working friendly with everybody, but in the back room, you have your own initiatives, right? Your own,
I was a compact, and then
or
HP
compact.
bought.
Yeah, yeah,
Yeah,
yeah. But you work with you may work with your competitor, but you have your own initiative. So it's
absolutely.
always, what can you do for your company to be successful? That's the goal. But at the
Yeah,
same time, if you need to buy parts for your computers, you got to stay friends with those, with your plastic vendors and your metal vendors and all your vendors that you work, all their strategic partners. You're still making friends and nicey, but in the background, you're saying, okay, what are we going to do to, beat our competitor? So all these language models are competing, Anthropics and ChatGPT and this, that. They're all viciously competing, but and they're also working with each other. But
absolutely.
now
Yeah,
we're going,
it's
yeah,
yeah.
it's
What do they
crazy.
say?
Yeah.
Politics makes strange bedfellows. I think
Hmm.
AI is making strange bedfellows too.
uh, I think
What a great
something
topic.
It
I
is.
saw
Yeah.
this the a historical breakdown of Nortel and Lucent and Cisco back in the 90s and what happened there with Cisco and something to and you can compare it to today. Cisco is a hardware company. They produce routers and switches. When you look at NVIDIA as an example, NVIDIA is a hardware company who put an AI wrapper on it, who, from a marketing perspective, they just create chips. They were a gaming chip company. They then crypto gave them a good luck handshake, and crypto mining started using GPUs because they're faster and more efficient. And then AI comes about, and they throw this marketing wrapper on it. They're a hardware company, and I think if you look at them and Cisco in comparison, in their revenue and earnings per share growth over between the 90s and Cisco's run into 2001, and then you look at NVIDIA's run, there's a lot of similarities. And the thing that sunk Cisco was that they came out, was it John? I forget his last name, but he was the CEO, and basically said they expect to miss earnings by 1 penny. And within about a week, 2 weeks, that stock sold off 20%.
Yeah.
Okay. So, and what was happening in the background was that middle management was not conveying to upper management that things weren't going as well as John was preaching to the public. And you got to ask yourself, is that similar situation happening with a company like NVIDIA?
I think
Is
it
that
is.
in the
I don't hear.
background they're
Yeah.
saying, hey, we're not doing as great. I mean, yeah, we got a lot of inventory and our accounts receivable are high, but still have a lot of inventory. That inventory is not moving. And a similar thing happened to Cisco. If I can find the video of the historical breakdown of it, it's really interesting. But you start to look at those little things that move that happen behind the scenes that we're not hearing. We only hear about these mega deals between companies, but look at how one pattern to look at is how big is look back in time and look at how big is the mega deal and how does the mega deal become smaller and smaller and smaller over time. And when you start to see that, you saw that with Nortel in the 90s, then the mega deals went from 1 billion to 100 million, and then less. And that is a desperation of marketing trying to pump the stock. And I think these are just patterns that we should all recognize that in the end, these are just companies, and their CEO's number one job is to make sure that stock price goes up. And sometimes they may just bend the truth a little bit. And I
So,
think
so
that's sort of where we're
Yeah.
at right now.
it's important to note though, Trent, on that piece though, the the leverage that NVIDIA has, is its software too. They have
Yeah,
CUDA, that is the most
yeah,
entrenched software used in all their customers. So their
right.
customers, if they say, geez, I want to go to a less expensive TPU at Google, they have to switch over. It's not just a hardware switch over, it's how
It's the
entrenched
software.
CUDA. Yeah, and
It's everything.
that's their biggest stronghold. It's not just their fast GPUs.
But
Yeah, well,
they're
So
going to
it's
have to hold
Paul,
very
on to
so the
that
Paul,
because if there's an opportunity, somebody will figure that out, to make it
uh,
cheaper. And yeah, I
of
mean
course,
that's
of
just
course, yeah, of
that's just
course.
the market,
Yeah.
I guess here's the thing, Paul. And you're right, they are entrenched both from a hardware but software standpoint. But I guess my question is, it's like my daughter came to me a couple of weeks ago and said, "Hey, you can upgrade your phone for free with AT&T. You know, you can upgrade from your 256 gig, storage to one terabyte. I think it is what it's called." And I looked at her and I was like, "I still haven't tapped out my 256, so why would I upgrade? I mean, my phone works perfectly. Why would I upgrade?" And I think that's possibly that little fine line we forget about is we have this massive capex spending, and yet at some point, maybe they go, you know what? I don't need. I got all the GPUs I got. I got all the speed I got need. I can't really, build out more because of other expenses. So I got to back off. When does that happen? I mean, that's just a natural that happens, it happens with me, it happens with everybody here, but on a corporate level, at what point do they go, we don't need any more speed. We don't need to upgrade this month, that kind of thing. And I guess that's where I'm looking at this. And I look at their stock price. I look at the stock prices and they're all doing this
they are
right
doing that.
now.
Yeah,
They
yeah,
don't need it until they start falling behind.
yeah.
And there's
Well,
a whole heck of
I
a lot
mean,
difference. A TPU chip was geared into the Google Cloud. That's where it works versus the NVIDIA chips, Rockwell chip that they come out here recently. I mean, their mode is huge. Having CUDA as the software for it, people are or companies are built into it, whereas the TPU is just again, it's centralized to Google and to their cloud service, and that's it. So it's a limited internal
Okay.
market for them.
Yeah,
So
I
right now,
understand
it's a
ASIC has
headline.
limitation too.
no,
Yeah.
they all do. They're going to have their positives and negatives, and yeah,
But when you
it's who can integrate the best at the cheapest at the most efficient will probably win the game. Because
but when
I have to believe that being that when I was in the computer business, we were kind of tied into Intel and the 286, 386. We had to wait for them to give us the better part, and everybody was into Intel. You had to buy Intel, and then you had other companies pop up, and all of a sudden you're like, hey, I can use this chip over here, a lot easier than Intel. And Intel's been screwing me for the last 5 years on price, and I think you see that with Nvidia. People are like, the big companies like, we have to use Nvidia right now, but if we didn't have to, we certainly would not because they're too expensive, and they run the show now.
Hey, Steven, you bring out a great point. So when Meta proposes a deal with Google, it's the intent to use it on the Google TPU cloud structure. Is that how it may unfold?
that's my understanding. It's going to
Okay.
be Meta's basically collaborating with Google to use their to use their services basically for that, as I understand it. I at this point I'm not seeing that Meta's actually building out their own Google Cloud services to do that uh, at
Well,
this point.
that's a
And
huge shift though, right? Right. If Meta goes that direction, because Meta's playing both sides kind of right now. I
well,
understand. Yeah.
they've got their feet into several different Zuckerberg's not dumb. He's got his feet kind of, what's the word I want to use? Well, he's
French.
diversified. He's got several different things going on. He doesn't necessarily have to. If you're basically an advertising company, which is what he told Congress, and they make the money using ads with Facebook, and now I realize they've got several other different things going on. But sure, while you're building your own, if you want to build your own, is the question, then sure, you build stuff with NVIDIA because it's just a larger moat for everything you want to do. But for certain things you want to do, yeah, Google Cloud Services and using the TPMs or TPUs, yeah, absolutely. Um, and one thing that I didn't hear mentioned, I heard more the retail or the end user side of it, like what we might use AI for. But the bigger push for AI, as I see it, and with what I've seen with a number of different companies that I won't say God, I'm going to say work with, and that's a lousy way of putting it, but that I bump into through my work is a
Hmm.
better way of maybe not there. I haven't had my coffee yet. Uh, but I use that as an excuse. But long and short, what's really going to make AI go is when, and as companies are doing right now, is converting everything into an AI platform, and people will people will have their own AI agent within the company. Therefore, you have one employee doing two people's type of work because they can uh, access and program and use it to facilitate what they're doing, um, to be a whole lot more productive and get a whole lot more done.
Yeah, yeah, basically way more efficient.
Yeah.
Well,
Here's
essentially,
the
when you got
we
one
have
person, and during some of the stuff that I do with my work, well, I use a couple. I use an AI agent while I work to help me with my work. It makes it where it's much more efficient. I can reduce the time that it takes me to resolve a networking issue, or do something like that. But what I've seen all companies want to say that they've got AI agents doing various things to make them more efficient, more productive, and therefore will earn more money. What what Trent will use it for, what Mark will use it for, what I will use it for, is going to be our, like Trent and Kerry, both are using it for our niche here. And whereas when I created an AI agent just for something I had to do for work the other day.
Yeah.
Are you in IT, Stephen?
Yeah, I am.
I kind of got that sense when you were talking. Thanks.
Well,
Yeah.
It's
I'm not 100% yet, but
well, it's going to be. I mean, it's going to be
each
interesting and
morning.
fascinating to watch, and it's interesting that Kerry has chosen to focus on it, and he's done his deep dives and his tell sheet on that. So, as far as AI goes, I think this group's probably further ahead in understanding what's going on than most average
yeah.
retail people. So, um,
No, I think I think
Oh,
it's a great discussion
yeah,
well,
because the
Yeah.
more we mix it up on this topic, the more we could understand why
Well,
some companies are doing better than others.
yep,
and
yeah.
I guess my only point is we need to perhaps take the focus off what an end user, how they will use it, versus what a company is going to do with it,
right.
and what all companies are going to do simply because they see the production value. And if you can increase production, you can increase your income.
Well, yeah, and then reduce headcount, which increases your income.
I was
Yeah.
struggling with did you
In some
see
cases, yes.
the interview with Synopsys with the Jensen and the guy from Synopsys, and Synopsys is industrial in the industry, so they build I don't honestly, I don't really know, but they were saying it's going to eliminate a lot of cost in the prototyping in
Yeah.
terms of factory build outs. And I just had a hard time understanding how they can, you know, really eliminate the capex spend on R&D development. They were talking
Well,
like that goes away and it's all going to be done electronically. And I couldn't wrap my head around it. But that, to your
Paul,
point, Manuel, that's it's not like how we use it is not where the real money's made. It's the way some company like Synopsys will use it.
I think Paul, my brother-in-law owns a oil and valve uh, yeah, pumps and valves manufacturer for the oil industry, and they sell all over the world. And when 3D printing came about, they went out and immediately bought like a dozen 3D printers. And he said, from a prototype standpoint, it gave them an idea of is they could put the design that the engineer created and put it to, and look at it physically. Then they came out with the ability to print in metal.
Hmm.
And now they're printing metal prototypes. And he says it's cutting the from idea to market in half. And it also helps reduce cost of actually building a big one, a full size one, and
Yeah.
these things are humongous at times, and wasting the money and finding out it didn't work and then have to scrap it. And so I think when you look at how AI is going to affect the industry, the world from a manufacturing or a corporate world, it is going to cut down the lead time from idea to market, and you're going to be able to test different things. And I mean, you look at the healthcare industry, they're running models that would take years to vet out ideas. Um, and they're doing it in a matter of weeks now. And so I think that's where, from the big money standpoint, that's where the money could be generated. It's the question of are these large language model companies positioning for that, or are they still thinking positioning from a consumer standpoint? And I think the consumer is not that's not your honeypot.
Define who your
Yeah, exactly.
consumer is.
Yeah. I think you're
Your
right.
consumer is
Bill,
business. I mean,
Okay.
Yeah.
they're
Bill, hey
last
Bill, let let's let Bill ask a question here.
uh, got a situation like this. I had a tool and die shop. We built molds for plastics. One of our customers was a first tier molder below Ford. And so Ford supplied them with a gigantic computer so that they could take and make what was a preliminary 3D print type of deal. And so consequently, all that money now is just about the same as what I have down here on my computer. And they used up a whole room to take this into. So we know that things transport and they go better and they get cheaper. Another case in Perry, I was over to college over in Indiana. They had a condenser that condensed electricity, and they were able to drill a hole through a razor blade. And now we have a little machine about the size of your desk that sits there and goes pit, 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 and does the same thing and cuts out steel and everything else. So things are improving as we go along, no matter what you talk about.
Yeah. It gets cheaper and more efficient as you roll. I mean, I used to have some parts way back when on the space shuttle. I was part of the program. Just I had pressure vessels, and we got to go. And when I worked at General Dynamics, I actually built the fuselage for the space shuttle, and we got to go and see everything that was in there, and everything was duplicated. All the computers were huge and duplicated, in case of failsafe. And and now my phone actually has more technology and compute than that space shuttle did when we first sent it up in space. I mean, it's amazing,
Yeah.
how fast we've moved in technology and in size and everything.
And
So,
at the same time, we haven't lost the jobs.
yeah,
Right.
That's
Just got
yeah,
true.
different titles. But
yeah,
it goes to
definitely.
show how the technology sector holds the baton as the moneymaker in the stock market.
Well, and that's how, as the United States, when we were able to move manufacturing across the sea and still maintain an economic power because we had the technology part of it. So China's trying to take that away. They're in the big race, with AI too and chips and all that. So we'll see what happens. Yeah.
Well, they steal our
Mark,
stuff, so that's
Well,
not
yeah,
good.
Japan did that too. Japan did the exact same thing, reverse engineered everything we sent over there. So, okay, well, that was a good discussion. Let's hit a few more things here. I wanted to uh, follow up on yesterday. Some of you were asking about different uh, cold storage wallets for crypto, and I put on my office. You can go in there and you can see. I just put a couple for most popular, best for simplicity, and do your own due diligence. But just some things to look for when you're looking at a cold storage. See, you can hop in there and see that. And then I put in the story from the Wall Street Journal about Code Red for OpenAI. So use our Discord as a tool to help you. And I know Trent puts a lot, and you guys all contribute. So that's awesome. I also want to look at just a few stocks here, and we're going to look at. We talked about. Let me put this up if I can get it going. There we go. All right, put this up, and then I want to get over to Trent because I know there's a lot. I think the Japanese bonds went up. They continue to rise on the carry trade. I know we have over $80 billion in the repo market in the last couple of days. So those are things we want to think about too. I just want to put up Credo because remember yesterday we were talking about, how it was way up. I said, well, you might want to wait on Credo just because, the history is it always ends back, when it started. So we opened up here, went all the way up and then came back down. Look where we closed right on the upper Bollinger Band. Of course, it's up where it was, but some people, and it'll probably go up, the way that's looking a little bit, but some people who rushed in might have got a little bit rug pulled, not had the price that they really wanted. So be patient on these things when they take off, and you hear some news on that. Other things we want to look at, I'm just going to do real quick because we talked about different things. Bitcoin. Bitcoin's now kind of come back out of this box a little bit, and we're looking at 93,000. And I said, my line was 82, and it did come down and wicked a little past 82, and this kind of kept in this box, underneath the 90 level, and now we're crossed above 90. And now the next level will be 95, psychologically speaking, to get above. But you're seeing the turnaround on both the MACD and the stochastic on Bitcoin. So we're seeing a little bit of that come around, and then MicroStrategy, you're seeing the same kind of thing. In MicroStrategy, we were watching this for a potential swing, and you did get a close above the 9 and right off of support. You're starting to see that the oscillators turn a little bit here also, and then you look at IBIT, the same. You're seeing that, it came down, hit support. We were waiting for that to turn a little bit, and we're starting to see that a little bit. So we'll keep watching that. We had BMNR. I know I was talking to David in the chat about this. He's into this, and BMNR came down and it's bouncing right off the 200 and the 9 now. So it has a potential for a little bit of a bounce, but it is crypto, so it is just be careful. It's volatile, but again, we're starting to see it is above the 200. So maybe for an investment type situation. BRKB was still in it on an investment, came back down and hit the 9. Okay, so we're right here's where our investment got in right at the 200. The 200 is now above our cost basis. The 50 is now following it. So we're still in on an investment kind on Berkshire, even though we're seeing a little bit of a turn on the oscillators. And then I'll just go to NVIDIA, and then I'm going to turn it over to Trent. And you guys have anything else you want to look at, let me know. But NVIDIA, like Trent was saying, we're just seeing this kind of sideways pattern, and it kind of goes up and down, but right along resistance. We are seeing almost, we're starting to see a little bit more improvement on NVIDIA on the MACD, but we're not there yet. We've crossed over negative on the 11th of November, and you can see the same thing. If we go to the SPY, that we've been in this sideways pattern. We're not seeing that, like we used to, just everything just roaring up, like we've been used to for so long this year again. But we are, above the 50, but we're right on resistance. So anything else you guys want to look at, just put it in the chat. We'll look at it. I know Trent's got some things he wants to talk about, and anything you guys want to talk about, it's an open forum, and let's go for it. Trent?
All right. So we talk about money flow. Money goes when if it leaves here, it goes there. It has to go somewhere. And one of the things we follow, I follow is the overnight repurchase agreement window that the Fed has between certain institutions, financial institutions, typically banks, and countries and that kind of thing. And so I always take a look here about what kind of activity we're seeing in this window and understand bank reserves are at right around 2.5 trillion dollars. Now that sounds like a lot, but in the grand scheme of things, it's not. It's actually at a sort of a border of getting really bad and bad. And so you're seeing the actions of the Fed. We talked about this yesterday, the stopping of quantitative tightening and all that. And so I just want to take a little review here of the activity in the overnight, the repo window, they refer to it. And that's where people come, or banks, institutions will come to the window and exchange treasuries or mortgage-backed securities with the Fed in exchange for dollars. They take that dollars and then they meet their overnight obligations. And so last Tuesday, we saw a bump here in activity, peaked out here on Monday, where we saw a jump up to about 26 billion was exchanged, and then it dropped yesterday down to 10.26. Here's the one thing I want to really look at. This is the SOFR rate. This is the rate at which this exchange is the interest that is paid on it. And what we're seeing is the cost to do this transaction is actually starting to cost more. We've seen it build up since Thursday, the 20th of November, and where it was here at 3.91%, and today it's at 4.12%. Well, if you think of it on the sense of hundreds of dollars, that ain't all that much. But when you think of it on the sense of billions of dollars, that becomes very expensive. And so what we want to keep an eye on is this borrowing rate going higher? Are we seeing more activity in the repo window? And let's look at a weekly chart here, and we'll go all the way back here to 2000, and you can see this activity back here, and this is a weekly chart, all the way from 2000 to 2012. You went through the dot-com bust, you went through the housing or great financial crisis bust, and then you got to this area, the pandemic. And that was the big one because the whole world shut down. When the great financial crisis happened, the whole world didn't shut down, but during um, the pandemic, the entire whole world basically shut down, and we had a massive demand for cash because cash wasn't being basically generated in a sense through jobs and that kind of thing. So you saw this big jump. Well, it's been quiet since 2020. Um, and now we're starting to see bumps. We saw it back here on the week of October 27th. It got sort of quiet again, and then we see it here in November. And so I just keep an eye on this, and then I tie this into what the Fed is doing with quantitative tightening and stopping that, and then interest rates. And I'm going, okay, what's happening here? This is indicating to me is money has started to dry up, and now we've got put the paddles on, we're not, maybe we're just doing CPR a little bit here to get the breathing going. But I think this is something to take into account. And when I look at companies like NVIDIA, like this, in this price movement we've seen since really August, yeah, we had a big bump here in October to where it hit all-time highs, but we've come back down. And I'm like, is this a product of one, headlines are being questioned? Two, is it a question of they've sold more GPUs than are needed? Or three, is the whole money system drying up? And so, since money has all really flowed into the Mag 7 stocks for the last 3 years, primarily, is that money drying up in this area? Is this more about money drying up? And we see that in the Japanese carry trade idea. And that's we've seen yields since 20, September of 24 go from in the 2 year, let's see here, September 30th, 24 was at the yield was at 0.392. Today it's at 1.01. So if you're borrowing against this, your cost to borrow is escalate. The same with the 10-year Japanese bond. The cost to borrow in Japan has escalated. So that money that was borrowed in Japan and then converted from yen to US dollars and then bought Bitcoin, bought crypto or bought AI or bonds is now being called back to Japan. And so I look at this is a cycle of credit expansion, cheap money got cheap, credit expanded, and now we're seeing it contract. And so we're seeing this on a global scale. And so when I look at it from a bigger macro picture, I'm looking at this going, okay, we've gone from the tropical lush climate of the Amazon or deep in
Where
the
Bill is,
Amazon. What's that?
where Bill is, the
Yeah,
tropical
where
climate, where
Bill
Bill is.
is
Yeah.
to the Mojave Desert. Are we entering that phase? And I think that from a money flow standpoint, we're starting to see that. And I think that's something in your risk management toolbox, you start to look at, okay, money is now contracting. Fed is taking action to get us back into the Amazon. They're doing things that probably should have done 6 months ago, or a year ago, or a little bit a year ago and trickle it in. But now they're doing some drastic things. And we're seeing the same with in Japan. They're fighting inflation, so they're raising interest rates. And so I look at this and I go, this is a product of the foundation is money flowing from one place to another. And then you get into evaluations and are these companies really worth 300, 400% PE ratios or, or what have you? Or should they, are their revenues truly slowing or how is their accounting being done? These are questions that are second tier level questions I think the market is asking now. And so we're seeing this rotation. Um, let's see, just real quick, I'll just hit on the S&P here and we'll open up for questions and comments and charts and stuff. But this is the S&P 500 and this is the SPY ETF. The option markets is pricing a resistance level at 685. We opened up yesterday higher, but we closed lower and basically bounced off that 679 bull bear fight line yesterday. And the question is, will that hold support? Today, it looks like pre-market will open up at $680.29. You've got a second tier support level at 675, but market makers are pricing in 670 as your bigger support level, which is right there with that intermediate trend line, that yellow line there. So what I'm looking for is a couple things. One, will we hold above the bull bear fight line more in a bullish positioning, or will we close into the bearish section and see accelerated selling? Will 670 hold up? And will my trade trend line, that white line, cross through this yellow line, that intermediate trend line? If that crosses through, then I know momentum and relative strength in the SPY is waning, and we could most likely see another pullback down. So we're in just December is a bit of a short month. It's about 3 weeks. We've got light trading the last week of the month. This is the end of the year. Money managers are trying to book gains, make their books look good. So at the end of the year, they can keep the money that's been placed with them. So keep that in mind as we go through this cycle, but also keep in mind there are other areas as we move from a phase one of early expansion to phase two, where we're at now, we're the late expansion, and we possibly move into more of a phase three stagflation. There are other industries and sectors that will perform well in the stage we're in now versus where we have been. And if we move into more of a stage three stagflation environment, we see more other companies that will do better in that category. And I think that's where, as investors, we need to be flexible where we're placing our money and where the true opportunity is in the future, not behind us. And I think we can get mixed up in thinking behind us versus in front of us. And so look at these things as you're, flipping through your charts and that kind of thing, and ask the question, like, why would this continue? Why would this not continue? Do that, and I think you become a better investor. All right, Mark.
Okay, we got a few charts that people want to look at. One was Google. I'm going to start. Just go back year to date just to see kind of where we were, and you see where we started out in January. Okay, we're at 193-ish, and then it's kind of interesting because we kind of had this little, from where we had earnings on February 4th, we really didn't get back to that spot until August. You think back, you think it just went up all the time. It's kind of weird that it didn't. And from that August area, we started to see that it come up, and now we've kind of hit, resistance up here. We're seeing that little sideways, like Trent's talking on Google, has the ability to move up. It's right on resistance. You're looking at, here's your volume is, really popped up, and when Gemini came out and, and Berkshire bought, and you got that excitement. But you're starting to see a little bit of a turn on the MACD, and you've already seen a negative crossover on the stochastic. So it makes you wonder, as we look at it a little closer on the 3 month, it makes you wonder if this 9's going to come up here and we're going to see that rollover, like we're seeing basically in the oscillators telling us that, and then we start seeing, this kind of sell off a little bit, or are we going to get some more news, with OpenAI and all that, and something comes out and this thing pops. But right now it's just trying to make a decision, on what to do. A lot of these, companies, and, we looked at Meta, and Meta is under the 200. We're trying to see if it can get back up. We're kind of playing on the 20. This one has, actually positive and growing MACD as we've come off the 9 and off support. And, we'll see, but we've been sideways for, 3-4 days. We'll see if we can pop that up, but you got to get past that 200. You get past that, we might be in the Paul Tudor Jones world again. And this is the only one that's of the Mag 7s that is under the 200 at this point. We looked at Microsoft was going to head down that way and touched on the 200 and then came back up, but kind of looks like Meta. It's come up, and you see the 4 days we've just been kind of sideways. We do have a little bit of a crossover on the MACD, but again, really tied up to resistance and right where the 50 is. So we're underneath that 50 also. So someone wanted to look at silver. Silver's been on a run and a tear, but it's interesting because the intermediate resistance level, at least on my program, came on right where we closed. You can see we've smashed up in it twice. We've hit it right on the outside of the Bollinger Band, and here's where we're going to open. Looks like right on the Bollinger Band. So we'll see if this continues to roll up. You got some resistance here and then some sell orders at 54.34. You see we had, the volume has gone up, and then yesterday we kind of came back down, and we're seeing a little bit of a roll on the stochastic, but still not bad. So we'll see if we go sideways, get inside that Bollinger Band, get a little bit of support moving up and then move up further, or we're going to take a little breather on silver or not. Someone asked about regression lines. How do I get it off? And here, come over to the draw here if you want to do a regression line. And you hit this button here, and then you can just click on and move it up, and it shows you kind of the trend where you want to go. You can make it any color you want, and any size you want. And you can see if it's within, the channels. So to get rid of that, oops, don't want to buy anything. You can just click on it and then hit remove, and it goes away. So hopefully that was the question you were asking me about how to get rid of
Fidelity Active Trader Pro, correct?
Right. And I asked him, and
Yeah.
that's what he was using. So yeah, so that's how you get
Okay.
rid of it. If you have any other questions, let me know on that. So what else we got? You're welcome, Robert. App 11 APP. We'll take a look at that. Take a look. This has been one we've watched for a while. Let's share the screen here.
I just mentioned it because Brian brought up a good point where you have Meta and Google both being advertising companies and now working together. What a coincidence. And
Yeah.
App 11 have to be an advertising company too. So that's
Yeah, I see this resistance one too. I like to see it get past that. It tried, it whipped up, hit sell orders, but you got good oscillators. But if we can get that past that resistance level, we could see it move. But right now, it has a pretty good level of hitting that. So watch that level, 656.30. If you can get above that meaningfully and continue on, that would be interesting for me right now. That'd be where I would sell on a swing trade for me. But if you get past that, some of you guys who like to play the momentum more might stay in it and see if you can get past that. It is nice to see the Bollingers kind of diverging too, and with these oscillators moving in the right direction. But it has a pretty good level of resistance right there. So watch it. App 11 has been a good stock. Let's just go back year to date. We'll take a look at this compared to like Google. Let me see if it'll give it to me. We'll go back 1 year. There we go.
It looks
So
to
1 year.
it looks to open up at 658 today.
658. Okay, and we
Yeah.
closed at
653.
653, so up $5. Yeah, and that's about 684 is where we see some sell orders. So yeah. Okay. Yeah, so I mean, we had this nice bump. I think we caught that bump up, if I remember right. I think Bob brought this up, and we caught that. I think Trent, you put it on to tell and caught that nice
Yeah.
run up. And then ever since that, it's kind of been zagging. So we got to get past where we were up here. If we can get past that and then try another run, but it's moving up, hit some resistance. We've done this before. Here it, popped above it, came back down. Then we fought, and here we are fighting it again. So we'll see what happens with that one.
700 is a big resistance level based on my charts.
Yeah.
If we could see a breakthrough that, it's got blue skies ahead. So
Yep. That's a little ways away, but we'll see how it goes. Yeah.
yeah, absolutely. Cool.
Julie wants to know at some point, can we review
Tell
how the
sheet
tell sheet
is?
12 is used?
Yeah, sure. Let me pull it up. Give me a second to pull it up. Ba-bum.
Julie down there in nice warm Naples, Florida. Rest on freezing up here.
Right. Where is it? Bear with me here.
Mark, one thing I noticed if you were to look at XLK, XLK's been up 7 of the last trading days, and it's actually diverging away from the S&P. So there's some action of the XLK pushing up higher. Very interesting.
Yep. Then it closed above the 50 finally too. It's been a while.
Yeah, it's getting some support, right? Support above the 50 to 20. The 20's going down though. That bothers me. The 50's flat, but the 9 is up. Yeah.
You got some sell orders about 292 and then a little bit on the resistance area. So we'll see if it flattens out or if we can get past that. Yeah.
If you were to
All right.
compare that to the S&P, it's actually diverging, which is a nice thing.
Well, you would
So,
think that because this is technology and the S&P has 500, all kinds of different companies in there too. So yeah.
yep. hmm
Okay. Thanks. All right, Trent.
Yeah, so this is the Tell Sheet 12. It's stocks that back in June were on Kerry's Tell Sheet, if it was the Tell Sheet or watch list. And I ran a screener on top of these, on top of those to screen out basically 12 companies. And the concept is, and this is really 12 companies is the max that I think for me to keep up with and understand what's going on and to keep up with them on a weekly basis is enough. It's very concentrated into AI, in particular AI hardware, that kind of thing. And so I take this information, take these stocks from Kerry's ideas, and I created this. And so what to break it down, basically, I implemented it on June 16th, 2025. It's up 68.21% since then. It was, take into account, this was up over 100% prior to November. So we're seeing it pull back. And I also estimated what the return would have been if we started at the first of the year, and it's up 89.91%. And so this is a list of the companies here. The low end and high end. This is calculated based on 62 period moving average. And it calculates the standard deviation between where the stock price closed at the prior day and where it's based on volatility and standard deviation movement, where the stock most likely will trade within the day. So on in this case, AEHR test systems, the low end that we possibly could see today is 2182, and the high end is 2479. So if you're looking for an entry point and you're more of a short-term in trader or investor, you're trying to buy as low into the low end and capitalize on that. And so what you see here is the percentage of the stock price from the low end is 2.94% and is 9.39% away from the high end. So you're getting into an area if you're looking for a possible pivot in the stock and you want to trade it. This is where you're buying more in the low end of it, projected low end for the day, and your high end looks like you potentially could have roughly 9% upside to it if you were able to buy it in this area. The trade trend line, that is my 15-day moving average. It front runs the 20. Since the 20 is most popularly used amongst retail investors, I'm taking a more institutional approach and front running using the 15. The intermediate trend line, this is the line that's my line in the sand. That's 62-day period moving average. If the stock is trading below the intermediate trend line, that tells me it's losing steam, basically. And as long as it is below that, I don't want a full allocation. What is a full allocation? 12 companies, 8% max allocation, initial allocation to these companies. Now, if in this case, AEHR is trading below the intermediate trend line, I don't want a full allocation because the momentum is south. And so I don't want to, fully allocate and then just get hammered as it goes south. So if I'm initiating it, I've calculated out what that allocation would be, and it would be 4%. Now, this is cautionary because we are below that intermediate trend line. And so if I started out with AEHR on June 16th and I've ridden it up since then, I'm up about 90%. I would be looking at this going, okay, I need to reduce my allocation down to 4% allocation based on the rules of the portfolio. because I don't want to lose that money. Okay, losing no matter your age or where you're at in status in life is not good. Okay, so just remember that. So
It's not cool
then
to be a
I
loser? Come on.
no, it's not cool to be a loser.
All right, good.
Okay, so the 200-day trend line, that's your 200-day moving average. It's still above that. So I'm comfortable having a half allocation to this at 4%. But if I continuously see this decline towards the 200, I may want to start dollar cost averaging out. And so a minimum allocation in the portfolio is 1%. So as we bounce down here to say Meta is trading below the intermediate trend line and below the intermediate or the 200 Tudor Jones 200 or 200-day moving average. So my allocation to that presently is 1% of my capital. Okay. Um, I want my foot in the water, toes in the water, but I don't want to get my whole body into it. So I have that 1% allocation to it. And my portfolio can withstand 1% of the assets declining versus 8%. Okay, so that's the methodology behind it. And so if Meta were to jump above the 200, this number would jump probably back up to 4%. I would suggest dollar cost averaging in, and at maybe 100 basis points, 50 to 100 basis points at a time until you got above the intermediate trend line, because that's sort of, you got your head above the water, you got you're probably waist high up, and you got more opportunity on the upside once it crosses back above the 200, back above the intermediate trend line. And so these numbers change on a daily basis. The current price numbers change every 20 minutes, and the low and high end numbers change at the end of the trading day. So that's the way I would think about it. And somebody brought this up yesterday to me about asset allocation. This is your alpha generating portion of your portfolio. In my opinion, Kerry's portfolio is the alpha generating portion of your portfolio, which means you're not 100, all of your assets aren't 100% in either one of these. What these are is, I think of in core and satellite approach. And that is, the core is your stable, that's cash, maybe some allocation to some commodity type assets like gold or silver, some bond allocation, maybe corporate high-end corporate bonds, depending on what phase we are in the economic cycle. And that's your core. And it has also maybe a sector exposure, overweighting and underweighting versus the in relation to the phase that we're in. And so you have that core, and that's like the majority. Maybe that's anywhere for an aggressive investor, 30% of your assets, up to your middle of the risk, what a moderate investor around 50 to 60% is in that category. That extra 70 or say 30 to or 20 to 70%, this is in your alpha generating positions. This is in a tell sheet 12, or this is in Kerry's portfolio ideas. Maybe take 20% of that alpha generating, and if you're into swing trading, you apply that maybe 10 to 20% into swing trading. So that gets you, a basement of the house is your core portfolio. Your first level is your first level alpha generating, and then your swing trading is the third floor. Okay, think of it in like basement, first floor, second floor, third floor kind of thinking. And I think that's how I look at this. If you're running this 100%, preserve, protect. This should be your number one and two things. Preserve. If you're doing 100% of your money in the tell sheet 12, you have to preserve your capital. This thing moves around a lot because of its relationship to, or its just natural because
Volatility.
of its thank you.
Yeah.
Okay, so you want to preserve capital. You don't want to lose money. So you need to protect. How do you protect? You run trailing stop losses. You run, you know, one feature I want to add to this is the 30-day standard deviation movement of price movement for each stock. I'm working on that's another feature I'm going to add to this. So it gives you an idea that says, hey, this stock in 30 days moves, on an average, like say Nvidia's like 4% standard deviation on a daily basis. Well, if I'm going to put a stop loss in there and I don't want to get triggered out anytime soon, maybe I put that stop loss at 7% down or 10% down. If you're more of a short term perspective, maybe you tighten that stop loss up. So that's how I look at this. If you're using this as 100% of your portfolio, then you need to have a good risk management process in it. And we have seen that in the last month and a half. We were over, I think, 112% return on this since inception, which was June 16th. So it's not a full year, it's a very short period of time. Um, Yet now we're at about 66%. So that's a pretty sizable drawdown. Still great performance, but still very, very volatile. And that's where using this as a alpha generator and having a risk management, preserve and protect process behind it will help you make money. Because in the end, you don't want to lose money, no matter your age, where you're at in life. Because when you lose money, you got to claw it back. And sometimes we may be we enter stages where clawing it back takes a long time. And unfortunately, we continue to age and get closer to our our end goal. And sometimes the market doesn't work that way. So preserving your capital is really very important. So hopefully that helped explain that.
Yep, that helped me.
Okay, cool. All right. And that's
All right.
something, one last thing. I'm going to put together just a call about asset allocation and creating model portfolios and asset allocation and how to do that. I think that's one thing that we're entering a phase in the economic cycle where asset allocation and risk management are going to become very, 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 very important to the preservation of your capital. And so I'm going to put something together and I hope to maybe do it next week and just do a informal what is asset allocation? Here is a couple different asset allocation concepts that you can implement. And if I'm quick enough, I could put a tool together that could help you allocate stuff in the future. So, wow, time went by fast today.
Yes, it
That's
does.
all I got, Mark.
Yep.
Any other questions or comments or anything we need to hit on?
Okay. All right. Market's open and we're off. So,
One last question Julie asked. Are you planning to keep the same 12 companies for 2026, or do you ever swap out companies? We have swapped out companies. We swapped out IBM for AppLovin. That was a good move. I swapped out um, ASFR, Affirm, because of credit risk. And I swapped it out for ASML, and you can see that over here added dates there. And then down here, as you can see, I've revamped this a bit. These are the two companies I've swapped out. So I will be putting this link up on the website, updating this today as well. So you can see it on the website as well as on the Discord. So I wanted to make it cleaner and look nicer and that kind of thing. So yes, I will be. And one of the things, Julie, I'm considering is stepping outside of Kerry's tell and watch list because of the economic phase that we are in and I believe entering. And so I want to create more of diversity in it. And so I'll update you all on that as well. So there you go.
all right.
More to come. All right,
There
we'll
we
wrap
go.
it up
Hour and
there.
15 minutes. Yep.
Thanks,
Yeah.
guys.
Well,
All right.
thanks for
Okay.
joining us. We'll be back here tomorrow. And thank you all for the great conversation today. This week has been pretty cool, and I like the in-depth conversations we're having.
I think
Um,
everyone got
helpful.
some rest over Thanksgiving, so they got their brains going again.
There you go. All right. You all take care. We'll see you tomorrow, same time, same place. Live
Have a
loud.
good day.
Live
All right.
that.
Thanks,
Keep
Yeah,
busy
guys.
living.
Thanks.
See you guys.
Thank
Later,
you.
Mark.
Yeah.